Hi, my name is Aziz, a fellow of the Association of Chartered Certified Accountants, ACCA. Welcome to part 2B of the course Bookkeeping up to Final Accounts. Today's topics are trial balance, extended trial balance, suspense account, subsidiary ledgers, profit and loss account, also known as income statement, balance sheet, also known as statement of financial position. Now let's get started. Now, what is a trial balance? A trial balance is a list of all account balances. A list of the balance on each account in the nominal ledger. Assets, liabilities, equity, income, and expenditure. Now, those balances need to be drawn from the nominal ledger. They must have been drawn from the nominal ledger to produce a trial balance. For example, if you pay for the following in cash, and you need to record them immediately. Say on the 1st of June 2020, you buy printing papers. You want to describe it as printing, postage, and stationery and give it that code. Let's say you pay £20, you pay £20 for it. On the 2nd of June, you buy pens and also give it the code for printing, postage, and stationery and pay £10 for it, and so on and so forth. Let's say within that very short space of time, you paid £100 for printing, postage, and and stationery on various dates. On each occasion, this is what will happen. The double entry will be, let's say on the 1st of April 2000, on the 1st of June 2020, you will debit printing, postage, and stationery expense account in the nominal ledger with £20 and credit the petty cash account if you pay for the item in cash from your petty cash pot. Now, in every computerized accounting system where the system is integrated, it means that when a transaction is entered in an account, all accounts in the nominal ledger and all accounts that are associated with that transaction will be updated immediately. As a result, the total monetary value of the transaction that have gone into each account code, which will appear on the trial balance, it is the total monetary value of the transactions that have gone into each account will appear on the trial balance, not the value of each transaction. In other words, the trial balance will reflect the collective total of the transaction. It will not reflect the individual transactions. In the example shown above, the trial balance will show £100 as a debit, that is expense item, under the account code printing, postage, and stationery. It will not give you a breakdown, the breakdown that I've shown you earlier. It will not do that. It will just show you the total. So, whenever you produce your trial balance, it will show a list of balances on your assets, liabilities, equity, expenditure, and income code. Now, here is an example. Here is an example of a trial balance. Under the account code 1000, you see leasehold, and the balance on that account is £100,000. That is what we see on here. That is all the trial balance will show you as far as this account is concerned. But in the nominal ledger, under the same account code, you will see a long list of items which make up that £100,000. You will see the purchase price of that land, freehold land. The amount paid for that leasehold land, solicitors' fees, surveyor's fees, land clearance fees, soil testing fees, and so on and so forth. In total, they will come to £100,000, but you will not see those individual items or the nominal or the trial balance, because those will stay in the nominal ledger. And if the nominal ledger agree with the trial balance, they should agree with the trial balance. You will only see £100,000 there on the trial balance, which will be the total that will be sitting in the nominal ledger. The same thing goes for sales, which is code 4,000. The trial balance shows that in total we have made £530,000 sales in the period that we are reporting on. That is all you will see on the trial balance for that item. But if you go back to the income code of £4,000 in the nominal ledger, you will see a long list of invoices that were issued, which will total £530,000. Similarly, for every expenditure code that you see here, for instance, materials and consumables, the code is 6,040. That is what we find in nominal ledger. And in total, the trial balance is we've spent £10,000. If you go to the nominal ledger, you will see a very long list of items, the total of which will come to £10,000, must come to £10,000. Because your trial balance must agree with the nominal ledger, which is what they call your underlying accounting record. Now, your trial balance must always balance. Whenever you post transactions, you must always obey the rules of double entry bookkeeping. Remember what I said earlier on? For every debit entry, there must be a corresponding debit entry. And vice versa. For every credit entry, there must be a corresponding debit entry. That is why when you are posting transactions, you may be stuck sometimes. You may not know what to do with a transaction, which is what that suspense account is all about. So, I'll come back to suspense account later. Now, in other words, the debit and credit side must always agree. But in an environment, especially in most computerized environment these days, debit and credit will show in only one column, with the credit item recorded as negative, while the debit items are recorded as positive. But when you add them all up together, they should give you a zero balance. That is when your trial balance is set for balanced. Now, if your trial balance is not balanced, you will not be able to produce accurate financial statements, and your other reports will not be correct. Now, at the end of every month or every year, bookkeeping activities will cease, and all accounts will be closed for reporting purposes. It is at this stage that the accountant will take over from the bookkeeper. He or she will take over in order to produce a set of accounts, profit and loss account, balance sheet, cash flow statement, and so on. Now, before proceeding to that stage, he or she will need to adjust the format of the trial balance to accommodate error corrections, transfer between nominal ledger accounts, accruals, prepayments, and other relevant adjustments. Which means he or she will have to review every account in the nominal ledger, go through them, and look at transactions that may not have been posted correctly and make necessary adjustments. Go through every account in the nominal ledger and look at transactions that are not complete. For instance, you may have ordered goods. You have received goods or services in a period for which you are waiting to be billed. If the details are not included in your expenditure for the period, then your financial statement will not be complete. So you need to make your accrual. That is what the accountant will do. So, also, transactions may be sitting in the wrong account, and the accountant needs to move them out to the correct account. So, in order to carry out all these activities, the accountant will need to adjust the trial balance in order to accommodate what I've just talked about. And after adjusting the trial balance, if you look something like this. It will become what they call extended trial balance or worksheet. As you can see, the extended trial balance is like this. On the far left, there will be a column for codes, that nominal ledger codes, followed by another column for description of every nominal ledger code, what is building, for instance, followed by another column which is the original transaction which the bookkeeper produced. Then there will be another column for adjustments, which will be used for movement of data between account codes or error correction. Then followed by another column for prepayments. Like I said before, if you pay for something and you have not enjoyed the benefit of what you paid for, well, let's say the benefit of what you've paid for will be enjoyed in another period, another future period. Then you have paid in advance. You see? Then you need to adjust for that, because that is your money sitting in somebody else's pocket. You need to remove what you have paid for in advance, because that expenditure does not belong in this period. It's for a future period. Move it out from the expenditure side and put it in the prepayment code as a current asset. What you have accrued for, expenditure that you have accrued for, that is the benefit, the goods and services that you have enjoyed the benefit of, you have received, but the suppliers have not billed you. You need to acknowledge your commitment, to pay for those goods and services by doing your accrual. In other words, you will increase your expenditure for the period for the expenditure that you have already reported on the original trial balance with the value of what of your accrual. In other words, you debit that expenditure code to increase it and credit your liability, which is your accrued expenditure, which accountants call other creditors. Now, the end result of all these accruals and adjustments, prepayments, etc., will be the profit and loss account and balance sheet, which are shown on the other side. On the far left is the balance sheet, preceded by income statement or profit and loss account, because those are the two that you will present to your board of directors or the senior management. They will not want to see all these original trial balance, adjustment, prepayments, and accrual. They will only want to see the income statement and profit and loss account in order for them to know how far they've gone in the year in terms of performance. But this worksheet must also be kept for future reference and for audit purposes, if necessary, for audit purposes. So this is your worksheet. Every adjustment that you make here, every prepayment that you make here, and accruals must be properly documented and auditable. Auditors must be able to see them. They must be able to drill down to what lies behind every number that is shown on this worksheet. Now, the balance on each code in the balance sheet and income statement must be checked against the balance in the nominal ledger. This is known as reconciliation. Reconciliation should not really be, there should not be too much reconciliation work to do, really. In our environment where the accounting system is properly managed, where mispostings are kept to the barest minimum, and where the rules of double entry bookkeeping are obeyed, and people just push transactions through anyhow. But what you find in an environment where the staff turnover is very high, the control system is it's close to collapse. People come and go, and nobody actually knows the history of anything. You will see that mispostings will have occurred, transactions will have been omitted, and there will be a lot of tidying up work to do at the end of the year. Any organization that finds itself in that messy situation will end up, phoning up recruitment agencies to come and help them tidy things up. Now, but where the system is properly managed, the balance on the nominal ledger code, on every nominal ledger code, should automatically agree with the trial balance. Now, similarly, the balance of each subsidiary ledger, that the purchase ledger or the sales ledger should automatically agree with the balance on each control or reconciliation account in the nominal ledger. So, reconciliation work should only be limited to establishing the legitimacy of the balance in each nominal ledger account. That is, you need to ensure the reconciliation should be aimed at ensuring that the transactions in the nominal ledger are properly documented and are understood. Everybody knows what has happened, and there are papers to support what has gone into those accounts. That is what reconciliation is all about. It is also an occasion to identify transactions that have been put in wrong accounts and make necessary adjustments. Now, I mentioned suspense account later on. Let me just again discuss it in detail, in a bit more detail. Now, the suspense account is a temporary or holding account, a sort of halfway house for transactions whose destinations are not immediately known to the bookkeeper. Let's say, for instance, you've just received an invoice for a one-off purchase. You bought something on a one-off basis. It's not something you always buy. But you need to pay for it straight away because you have not actually established a trading history with the supplier. So you pay for it. You have to pay for that straight away. So, but you also need to record the transaction. But you don't know what to call it. You don't know the correct code to give it. So, as a compromise solution, you should debit the item to the suspense account because you don't know the right account for straight away. Debit it to the suspense account and credit your petty cash account if you pay for it in cash straight away. So let us say later on, you decide that the item that you paid for and recorded should be called materials and consumables. You should credit the suspense account to move it out and debit materials and consumables expense account. Whatever happens, whatever you do, you must ensure that you must clear your suspense account before you produce your financial statement and management accounts. Otherwise, your costs will be understated or omitted. Then your reports will be materially inaccurate, misleading, and incomplete. So it is essential, therefore, to clear your suspense account by moving transactions to relevant account codes before you produce your financial statement and management accounts. Now, subsidiary ledgers. What are subsidiary ledgers? Subsidiary ledgers are ledgers that sit outside of the nominal ledger. Examples are purchases and sales ledger. Those are the main subsidiary ledgers that I know about. Purchases and sales ledgers. The sales ledger contains the account that you have opened for every one of your customer, while the purchase ledger contains the account that you have opened for every one of your supplier. Now, in the nominal or general ledger, there is an account code which will be linked to the purchase ledger. That account code is called the reconciliation account or purchase ledger control account. It will contain the total of all the balances in the supplier's account in nominal ledger, in the purchase ledger. Now, look at the example below. Your purchase ledger shows that supplier XYZ, that your company owes supplier XYZ £3,000. Your company owes suppliers XYZ, TYX Limited £6,000. And also owes supplier DET Limited £8,000. So, in total, you owe all of them £17,000. Now, the reconciliation of purchase ledger control account in the nominal ledger must have a balance of £17,000. So, the two accounts, the nominal ledger and the purchase ledger, must agree. But only the balance on the reconciliation account will appear on your trial balance, not the individual account in the purchase ledger. So in an integrated accounting system, when you enter an invoice in a supplier's account, the following will happen straight away, immediately. The supplier's account in the purchase ledger will be credited. The expenditure account in the nominal ledger will be debited. Let's say you pay for the materials account in the nominal ledger will be debited. Even if you have not paid for the material, sorry. As soon as you post the invoices, the supplier's account in the purchase ledger will be credited, and in the nominal ledger, the expense account will be debited. If you have bought material, if what you have bought is actually materials, the materials account in the nominal ledger will be debited. The purchase ledger control account in the nominal ledger will be the purchase ledger control account will be credited because that money is owed to the supplier. Now, when you invoice your customer for services that your business has provided, you enter the details in the customer's account in the sales ledger. This is what will happen straight away as soon as you post the transaction. The customer's account in the sales ledger will be debited. The sales ledger control or reconciliation account will be debited because it is linked to the sales ledger. In the income account in the nominal ledger for whatever you have sold will be credited. Yeah? So just to recap, when you post your supplier's invoice, the supplier's account in the purchase ledger will be credited. The purchase ledger control account will be credited. The expense account for what you have bought, whatever it is you bought, will be debited. On the other hand, when you process your customer's invoice for whatever you sold to them, the customer's account in the sales ledger will be debited. The sales ledger control account will be debited because it is linked to the sales ledger. The income account in the nominal ledger for whatever it is you sold will be credited. Again, your sales ledger will give you this following picture as an example. Customer XYEFG owes your business £10,000. Customer IJK owes your business £20,000. Customer LMN Limited owes your business £20,000. So in total, your sales ledger shows that all your customers owe you £50,000. The balance on the sales ledger control account in the nominal ledger must be £50,000. It is only that the balance on the control account that will appear on the trial balance, not the balance on each customer's account in the sales ledger, which is only a subsidiary ledger. The profit and loss account, also known as income statement, is one of your company's financial statements, which shows the income that you have generated in any period together with the expense incurred. It deducts your expenses from your income and shows a profit or a loss for the period. Now, the profit and loss account comes about after you have closed the book and made necessary adjustment and produce your trial balance. The balance sheet, on the other hand, which is also called statement of financial position, is a summary of the assets and liabilities of your business in the period that you have the period that you are reporting on, which could be 1 month, 6 months, or a year. It enables people to see what your business is worth and how it has performed without them having to go through your accounting records. This brings me to the end of this part of the course. Thank you very much for watching. Please like and share, and I see you in part 2C of the course. Thank you. Bye.